Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reineck, and this week I'm joined by Jeremy Mullen, the editor of Zacks Counterstrike Service. He's been with us before to talk about shorting stocks, but this time we're going to talk about the hottest investment of 2016. Can't believe I'm saying this, but it's gold. Gold is up 20% so far this year for the physical metal, and people are going crazy over it. And I do have to say, I used to be a gold bull, basically. I bought the gold ETF for just the physical gold when it launched in 2004, because there was like all this fears about inflation and, the housing market was going crazy, and I thought it would be a good hedge. And I did hold it for a couple of years after the financial crisis, but then, that started to came off the high, started to go down. The stock market was rallying like the no business. And I thought, why am I in this? It should be kind of like a hedge on danger. I would be doing better if I was in stocks. So I sold it then. And apparently I was too soon or something, Jeremy. What's the story? What is going on? Why is everyone so crazy about gold now?
Yeah, well, there's a couple different reasons now. But, unlike you, I was always pretty bearish. Except the fear trade that we had back in the financial crisis, which, of course, people are scared. People wanted to buy gold. People wanted to protect their assets by putting money into gold instead of stocks or anything else. Besides that fear trade, I always was kind of bearish on it.
Okay.
So when we topped out almost hitting 2,000, I was actually looking for it to pull back all the way to 800, and we almost got there. We got to 1,000. But now something has fundamentally changed with gold. Yeah.
You've changed your tune?
Well, for a guy who just doesn't like it, gold is great for that fear trade. People there's a lot of people in India who buy gold just for the use of it. They think it's very valuable.
Holds its value.
Whenever it dips, they go in there and buy it. But for me, I saw no benefit as an investment unless somebody was going to pay me a higher price for gold. So if I'm going to buy gold at $1,200, I'm hoping it goes up to $1,250. I'm not expecting a dividend. I'm not expecting anything out of that investment. Warren Buffett is one of those guys who doesn't like gold because of that case. It doesn't do anything for you.
Right. Just sits there.
Right. Well, one of his quotes is, I wrote this down: gold gets dug out of the ground in Africa or someplace. Then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head.
So that Buffett said that?
Yeah, that's a Buffett quote. Right. So I kind of had the same kind of view as him, but there's something different going on right now. And there is this fear trade going on again. Central banks are doing something unprecedented, and people are scared. People aren't sure where to put their money, and where they would flock to before with government bonds is becoming kind of a questionable place now with negative yields going out. So I think there's negative interest rate policies in Japan. That's really what spurred this movement and this shift into gold earlier in the year. Like, besides the fear trade that we saw in kind of January and February, there's been an extra push. Even with this rally we recently saw since February, gold, it pulled back a little bit, but didn't really do much. And now we're back testing 1,300 again.
Okay. I know in 2004, the creation of that first ETF, which was the GLD, it's still around, it's still trading out there. That one created this whole new market and new easy way for investors to get into this area. Because before that, I had to go buy like the bullion. I literally had to go to like the jewelry store, buy some necklaces.
Right.
I had to buy the coins or
Sure.
the bars. They were selling the bars. You could go on the internet and buy the bars, but who wants that? Am I going to store them in my closet? No.
Right, they could get stolen, right?
Right.
Yeah. People like GLD because it's just paper, right? They can have access to gold through a paper account. For more sophisticated investors or traders who trade futures, obviously you can buy gold futures. That's a good way to gain exposure as well.
Yeah. And then I think a couple years after they launched the GLD and that was kind of successful, then they branched out into the mining stock ETFs, which you could always buy the miners just individually, but this encapsulated all of them. And then they've, the last couple of years, taken it even further steps by doing these leveraged ETFs.
Right. So now you can basically profit off of the companies that profit off of higher in gold prices. So if you're a gold a miner and you're taking gold out of the ground, obviously if gold prices are higher, you're going to make a better profit because your costs are going to remain the same. So the higher gold prices are, the better you're going to do. So there's GDX, which is a gold miner ETF, and that ETF is actually up 65% on the year just because of gold's move this year.
Yeah.
And then you got these triple leverage like NUGT, what I nicknamed Nugget.
Okay, so that's the gold miners triple.
That's a triple leverage,
I have it up over 300% year to date.
Okay, I saw in Yahoo Finance they have 200, so we'll have to check into that. But yeah, I mean,
Wow.
double digit, 100%, 200% returns. That's
a lot.
pretty good. Yeah. And then I have JNUG, which is JNUG. That is a triple leverage junior gold miner. So these are kind of the smaller, more riskier gold miner companies who have the more risk, more reward. Obviously, if gold continues to shoot higher, this thing's going to really take off because it has a triple leverage and it's kind of the smaller cap gold companies.
Okay, so those smaller cap gold companies, a lot of those, if you're a fundamental investor, for instance, might not be where you want to go because
Right.
those are the ones that likely might not even make money.
Yeah, and you have a lot of risk here. Now, if gold goes straight up, yeah, you're going to make money. But if we do have another pullback, let's say the Fed raises interest rates and gold gets hit goes from 1,300 back down to 1,200, these are going to sell off fast. And because they're leveraged, they're going to sell off really, really fast. So you have to be really careful and know what your risk is. And if you want to just see an example of this, look at what JNUG and NUGT did back in, when the gold had this pullback 2 years ago. Just see what the charts, look at the charts, see what they did. And that's kind of what you're risking if there is another gold pullback. Now, if we get past this 1,300 level, which we've been testing for the third time, and we go up to 1,400, 1,500, these things could really, really take off.
Right? More than 200, 300, 400%.
You know what? I like to be optimistic. I don't know if I can be that optimistic from here. I think a lot of this trade has happened.
Well, that was my next question.
Yeah.
Like for people interested in getting into this now, is it too late?
Well, I don't think it's too late. I think there could be continuation of this trade, especially if gold can take off past that 1,300 level. You just have to monitor these investments carefully. I would suggest using stops at certain levels. Give yourself some room because it is volatile. But I could see if gold goes up to 1,350, we get another 50% on these triple leverage ETFs.
Okay.
But if somebody just wants straight up exposure, I think the GLD or the GDX is a safer bet.
The boring ones.
Yeah, the gamblers can play with the NUGT or the JNUG, but the safer, boring ones would be GDX. And you know what? For GDX, 65% is not bad for boring.
No, not at all. So you were just mentioning that if the Fed continues to raise rates again this year, that's bad. It's a negative for gold. So maybe ahead of all these upcoming couple Fed meetings that we're having, one this month in June and another in July, what if I want to take the opposite side and bet that they are going to raise and that gold could come down?
Yeah, so DUST is the opposite. So that's dust, is the opposite of NUGT. So that's a triple leverage short gold. So that short the miners, rather.
Okay.
So, if the Fed raises rates and the market reacts, now remember last time the Fed raised rate, the market didn't really react.
Right. Didn't care.
And now we're looking at the 10-year at 1.6. So, something's going on here. But if the Fed did raise rates and rates did go higher, then you're looking at, a gold move that would go down pretty fast, and that would be DUST. You'd want to be in that. That would have a nice uptick, and you might be able to get a nice return on that one.
Okay. I see for anyone who's already betting that gold will be, declining, it's already down like over 90% year to date.
Right.
'Cause
So
it's
you've
the
got,
triple.
Yeah. And that's what can happen. So if gold goes down like that, just watch out for NUGT because it could have the same kind of move if, rates started to skyrocket and gold started to take a hit. And the fundamental move or the fundamental idea behind the Fed raising rates, why would gold go down? Well, the whole idea is you can get a better rate of return if rates are going higher. So people take their money out of that of gold and put it into government bonds because they can get a decent rate return. But if they don't raise rates and rates continue to go down, people are going to get scared that the U.S. is heading towards a negative interest rate policy, just like Japan, just like the Eurozone. And then you have to pay governments to hold your money. And why do that when you can just put it into gold? We're in this unprecedented kind of central bank situation. So you got fear working for you, and you don't have to pay the government to hold your money. So sit in gold.
Is there anything that we should be worried about with the Brexit with gold? Is if they leave, I would assume that's another good thing for gold.
Yeah, that would be good. That would be the fear trade.
Okay.
Right. So people will get really, really nervous, and you've seen the VIX in the last week take off. So money would flow into gold, flow into the VIX even more. You think markets might settle down after a while. It'd be interesting to see what the Brexit, how far it would go. This is kind of another unprecedented situation that we don't know how markets might react. But definitely I could see, money really flocking into gold and the VIX, obviously, for safety. So yeah, that'll be interesting to see how it reacts there.
I saw that Soros, now that he's back investing and handling his own money and is all bearish and everything, he apparently is buying some of the big gold miners, individual ones.
Yeah.
What do you think about the miners versus the actual physical gold? Like, if I really believe gold is going to soar here, do I want to even bother with the miners? And I'm not talking about like the triple or something, but just like those two different investments. Because one, you still do have to worry about them actually getting the gold out of the ground and all of that.
Sure. And if there is some kind of, let's say, like we have a financial crisis type situation, like those miners will go up to a certain extent. If there's some credit freezes up, how do they get money to do business, that kind of stuff. So, the miners can only go so high, in my opinion, on that fear trade. Now, if there's an actual fundamental thing going on with these negative interest rates, they could be profitable over many, many years. So maybe that's what Soros is going for. But, the basic gold trade, I think, is fine enough, and you don't have to get too fancy there.
Okay,
unless
so
you're willing to take those big gambles on those triple leverage ETFs.
Yeah, so like the GLD type of thing.
Right, exactly.
Okay, and what if I am interested in getting into this kind of trade? I used to see these articles where a lot of financial advisors would always say like, oh, only keep a small percentage of your portfolio in that. Is that kind of where you're at too, even though you're more bullish on it? I think it would be a little scary for people to be running out and putting, huge chunks of their portfolio into these things.
Yeah. Long term, since how I kind of explained my whole bearish thing on gold, long term, I'm still kind of hesitant to have it part of a long-term portfolio. I don't think it's a big deal to have 5 or 10%. I wouldn't want to have more than that. But as far as a trade,
Right.
I'm very comfortable getting long gold. And, me being a trader, I kind of always want to honor my stops and not let that run against me,
Yeah.
So.
What about silver in this instance? It's rising too, but it's
Right.
kind of like the poor. I always called it the poor stepbrother of gold.
Yeah. They're going to run together. And, silver is interesting. It'll get hot too.
Yeah.
I don't know if it's going to have as much of an impact in this whole fundamental thing I've been talking about with negative interest rates. I think it'll run hand in hand with gold. But I think gold is really where you want to be in this case, because people are going to look at like gold as a store of value instead more than anything else.
Right.
Yeah.
Silver also has that industrial use
Yeah.
component too. It's a little different.
Right. More of an industrial. Gold is too a little bit,
Yeah.
but more so silver. So there's more of a supply and demand type of issue. So if you're looking at the economic part of it, if there was some kind of big collapse because of the Brexit or whatever, Asia or whatever, maybe silver's the economic part of it doesn't do as well. So that because the demand obviously wouldn't be there.
I know that some of I think the GDX, the gold miner ETF, and the junior gold miner single, not the triples and stuff like that, they both have silver miners in there because I think there just aren't enough gold mining companies.
Right, it's like a small percentage, right?
Yeah, they put ones, and a lot of the gold miners also do, mine the silver as well. So they're kind of like a joint. You're getting both if you get the miners.
Yeah, which is nice. You have exposure to both metals. In that case,
Is there anything else we need to know? Because I feel like I'm seeing a lot of just speculation in this area. And I know I wouldn't call it bubble speculation yet, not yet, but is that possible? Could we see so many people getting so bullish on gold that we do test that 2000 level again? Or
boy, maybe like a former bear saying 800 and coming 200, points short of that. It's hard for me to say 2000. I think this is a temporary bullish run up that could see maybe 1500. But I'll go back to the Fed. I'll go back to negative interest rate policy. It's kind of an unprecedented central bank thing we're going through here. And it's hard for me to say what gold might exactly do.
Yeah.
That's what people are speculating. They're speculating Yeah, it can go to 2,000, it can go beyond because central banks are going to continue to do negative interest rates, and I need to be somewhere else except not in government bonds. So,
Yeah. I feel like I'm going to start looking at all the street corners when I drive around like the Chicago suburbs again, because a couple years ago, I would say, well, maybe it was like 2008 or 2009, all those gold stores started opening up. Remember those? Like suddenly the gas station was gone, the gold store was there, and it's like, we buy and sell gold. I never saw any cars parked there. I don't know. Did they make any money? I don't know. And then there were these stories of at the shopping mall, suddenly this gold dealer would show up like in the middle of the mall at lunch hour. And you could take like your gold necklaces there and they would like weigh it and give you cash in hand right there. And during the recession, this was a good thing for a lot of people.
Yeah,
they were able to cash in stuff that they weren't even using as the price of gold rose, and that was good. But it was also kind of a sign of some speculation, obviously, going on in gold. But I haven't seen those. A whole bunch of those gold stores in Chicago shut down. I'm not sure any of those are still open.
They got washed out. I don't know enough about them, what their price point was, where they were really profitable.
Yeah. They had to pay rent, obviously.
Yeah, exactly. So I think if I see
those,
if you see 1,500 gold, we probably see
maybe
those
some
pop
will
up
open.
again. Yeah,
maybe
we'll open one. Huh?
Yeah, I don't know. You know what replaced a couple of them I saw out in the far reach Chicago suburbs outside of Cook County? I have to say this is tobacco, because as soon as you cross over into the other county, the taxes go down. And so everybody drives out there to get the cigarettes and other tobacco products.
Right.
And so the gold places out there, some of them were replaced by tobacco. So, I mean, if I see the gold come back, or maybe they'll do like a combo thing, like you can get both things, then I'm going to get worried. But for right now, it doesn't seem like we're seeing those kinds of speculations.
Yeah, I think, just pay attention to the Fed, what they do, pay attention to rates, like the 10-year note, watch what it does. And as long as that doesn't start ripping up ferociously, I think gold is the place you want to be.
Okay. I think I'm still dubious. I guess I'm bearish now. That would be my take. Wow. Yeah. I mean, I used to be, like I said, like the bull, but now not so much. Still sitting on the sidelines. But if you are interested in anything that we just discussed, I'm going to run through the tickers again, just in case you missed some of them. So there is the GLD, that's the basic gold, physical gold ETF, obviously GLD. And then you have the gold miners ETF, that's GDX. We talked about the triples, the Nugget NUGT, and the JNUG. And then we also talked about the triple bear, the DUST. And if you're interested in the silver, you can go for just the basic physical silver one is SLV. That's the similar to one as the GLD. Oh, you have something else?
Yeah, one more thing. I just wanted to go over the 10-year rates of a couple of countries.
Okay.
U.S. is 1.6 about today. Japan is negative 0.155. Germany is just turned negative 0.005. Switzerland negative 0.486. So this is kind of the reason why people are flocking into gold. They don't want to pay these rates, these negative rates.
Right.
Yeah.
So they're willing to buy the thing that has to have the armed guards and all of that.
Yep.
Maybe you know what? Maybe I should be looking to see if Berkshire Hathaway starts buying some gold. Then I'll get real scared.
Yeah. If Buffett starts buying, there's trouble.
Then that's bad. Okay. So if you want to read more about gold, there are some articles, actually some really good ETF articles. I'll link to them in the article about this podcast as well. But you can find those on Zacks.com. If you put some of these tickers in, you'll see some real good articles talking about which ETFs you might want to buy for gold. And as well as Jeremy's other articles are all on Zacks.com. And you can listen to our other podcasts on Zacks.com again, of course, and on SoundCloud and iTunes. And be sure to check out the other podcasts if you're interested in shorting stocks that Jeremy and I did earlier this year. That's real good. It is, of course, just called How to Short Stocks. So check that one out as well. So until next time, this is Tracy.